In the last lesson, I explained what Forex trading is. Then in this video, we are going to take it a step further. I'm going to be explaining how Forex trading works. So by the end of this video, we are going to understand why currencies are traded in pairs, then what it really means to buy or to sell, then how traders make profits or loss in the Forex environment, in the Forex trading business. So let's go into it. So remember, we said Forex is basically a simultaneous buying and selling of one currency pair or another. So this currency pair, in Forex trading, we don't just buy one currency pair. You don't just buy or sell others. Currency pairs are traded. Currencies are traded in what I was everywhere. So which means either you buy or say you are buying or selling. You are dealing with two currencies. Basically, that is what it looks like. Example, look at what this is a pair. That is paid because money has no value except I pay and another. Yeah, really, money has to let's compare. So it's as if saying now that you and the Rovita and the Nova Tongas compare which cup. You see, so it's just like saying somebody is tall. Tall compared to who, right? So for you to compare something, there has to be an opposite partner, right? In this case, opposite pair for you to compare it with. So currencies are usually traded in pair, and every time you see the currencies are traded in pair, so you cannot change it. For example, Euro USD. You cannot see USD Euro. It's not possible. You cannot see because of this organization here, International Standardization Organization. So ISO, this organization is in charge of fixing currency pairs. So anywhere you see these currency pairs, it must be Euro USD. You can never see USD Euro. Other ones also are like that. Anywhere you see GP USD, for example, it will always be like this. You cannot see the reverse, right? Just like Euro JPY. It must always be like this. You cannot see the opposite because of this organization. It is fixed. So currencies are traded in pairs. So you have to know how these pairs are being arranged, the arrangement of these pairs. So with time, you get to understand the way they are being arranged. So this is the organization involved. So another thing we have to understand is that currency pair, they are into two. This one is the base currency. Then this one is the quote currency. Which means we are using this to compare this, right? So that is what it means on Forex trading. So this is the base currency. The first one you see is always the base currency. Then the one you are comparing it with is always the quote currency in Forex trading. So why Forex are traded in pairs? So this is the reason why they are traded in pairs, because Forex trading, you may always compare one currency for another. Currency has no value on its own unless we're able to compare it with another currency. Another thing is Forex market is a 24/5 market. What does it mean? It means that the Forex market runs 24 hours from Monday to Friday, right? 24 hours, then 5 days, Monday to Friday market. It's a decentralized market, right? Which means there is no particular building that you can say this is a foreign building. It is all done on network. It is all done interconnected by computer interconnectedness of computer networks. Yeah, put it that way. So it is over the counter trading method. So it is not centralized. There's no particular building or for trading. Everything is being done online, 100% powering. So this is what it means by 2-4 decentralized markets. So when we say what it really means to buy or to sell, this is what it means. So anytime you click buy the market, anytime you click buy, what you are saying is, you are saying, for example, let's use Euro USD. When you click buy, what you are saying is you expect Euro to go up, right? Then remember, we say it has to be in comparison with one another. So when Euro is going up, what do you think will happen to USD? You're expecting USD to do what? To come down. So that is what it means when you click buy. The same thing happens when you click sell on this particular asset. When you click sell on this particular asset, right? What you are saying is Euro should go down, then USD should go up. That is what it means when you click sell on this particular pair. So whichever pair you put, once you click buy or click sell, you should be able to interchange there and know what you are saying. So each time you say buy on this particular pair, you are saying this particular market should go up. And when this market is going up, definitely this second one is coming down. And when you say you want to sell this market, what it means is that this Euro should be coming down, then this USD should be going up. So that is what it really means to buy or to sell. Then out without net profit or loss from the market is that whenever you say buy and this market actually goes up, then you make money from the market. And if you say Euro USD should buy, once you press buy in the market, you are not just clicking buy, you are making the decision, a financial decision. So each time you click buy in the market, you are saying this market should go up. But if opposite happens, then you lose money. But if it actually goes up like this, then you make money in the market. But if the opposite happens, then you lose money. So basically that is Forex trading for you. Then also when you click sell in the market, what's the base scenario for you is that this Euro USD should come down. That is what your prediction is. You are predicting that this Euro USD should go down according to your prediction because you want to sell. But in the when this happens, you make profit, of course. Make profit. But in the case whereby it is supposed to go down, then Euro USD is going up, then what you experience is loss. So this is why you don't lose money or make profit in the financial market. It is as simple as. So now that we have been able to establish that Forex trading is being done in pairs, right? In pairs. So the next thing to understand is the types of currency pairs that have actually been traded in the Forex market. So we have 3 types of pairs that you can trade in Forex market. You have the minor pairs, and these are the kinds of pairs that you can trade in the Forex market. So major pairs. What do you mean by major pairs? So major pair that has USD in there, either as the base currency or as the code currency, but there is US dollars in there. USD is the currency in the world for trade, for business, for anything. USD is king, the dollar is king. So that is the saying. So any currency pair that has USD in it, that currency pair falls under the major currency pair. So the currency pair that has no USD in it, that one is the minor currency pair. So let's do this. So major currency pair, for example, we have the Euro USD. Euro USD is the major currency pair. You have the GBP USD. You have the USD card. and so on and so forth. So any currency pair that has USD in them, just so that currency pair based on the currency. Yeah, just like I said, you just have to know. Just like I said, you just have to know the combination of this pair according to ISO, International Standardization Organization. So with time, you have to familiarize yourself with them. So minor pairs, like I explained earlier, are those pairs that has no USD in them. So pairs like CAD JPY, you can see there's no USD here. So this one falls under minor currency pair. Another one is Euro JPY. So another one is GBP JPY. And so on and so forth. So any currency pair that you see that has no USD in them, they fall under the minor currency pair. Then this exotic pair. Exotic pair. What we mean by exotic pair is those pair that has the USD in them, but the other currency pair has to be the currency pair emerging economy, like the economy that we don't know. Let me just put it that way. So if, for example, you have the USD ZAD, USD ZAR, USD South Africa Rand is falls under exotic pair. Another one is USD MSI MXN, that is the Mexican peso. That is the Mexican. So in South Africa Rand, this one is the Mexican peso. What is our exotic pairs? Even our Nigeria currency self, USD NGI. Nigerian Naira. Even Nigerian Naira, all these are exotic pairs. You can't trade. Not that you cannot trade exotic pair. You can trade them. But the spread on them will be too much. So people don't kind of trade exotic pairs like that. But if you want to take the risk, you can trade it. But it's not advisable to trade exotic pair. Those pairs that are good, especially for beginners, like we're just starting, are major currency pairs. These are the currency pairs that really move the market. For example, this pair is the most traded pair all over the world. This Euro USD. Euro USD is the most traded currency pair in the world. By both, the most traded currency pair in the world. Now that you know how Forex trading actually works, the next question is, who are the people trading Forex pairs? Who are the market participants? In other words, who are the players in this market? That question will be answered in the next video. That is the topic of our next video, guys. You must miss it. If you gain value from this video, do well to like the video, subscribe to the channel, so when the next video drops, you'll be the first person to get into it, guys. Thank you for watching.